shares of India's most valuable company, Reliance Industries, have underperformed on the bourses so far this calendar year. The stock of Mukesh Ambani-led company has slipped 5% thus far in 2023 as against nearly 4% rally in the BSE Sensex index. The BSE Oil and Gas Index, meanwhile, has plunged 12.5% during the period. This underperformance comes amid volatile oil markets and heavy capex expansion by the company. Though the company remains a compelling long-term investment bet, analysts say the immediate trigger for the stock remains its September quarter results, which will be announced after market hours on October 27. According to Mayuresh Joshi of William O'Neill India, the robust performance of Reliance Retail may stand out the most during the quarter.
So if you look at Reliance Retail's operations, which are now spread across a large part of the country, and the expectations in terms of reasonable amount of growth expected to come through, even in the next few quarters as festivities begin, and the margins probably holding up, means that the core retail business that Reliance probably runs through should be relatively stable. When you're talking about telecom numbers and it comes to Geo financials per se, I think the ARPU increases that we've seen have been a positive surprise, and they might continue into the next few quarters.
He, however, expects the oil to chemical segment's earnings to be volatile.
When it comes to the oil and gas space, obviously the expectation is, with the kind of volatility that we are seeing in both Brent crude and gas prices, it should be somewhere that Reliance should benefit largely, because the GRMs that they probably produce, because of the different feedstock options that they've got, is relatively better than most players in the market. And therefore, this part of the segment, because of better usage and availability of feedstock, should be relatively better to the other players. But I think volatility in numbers might continue because of macros, as well as the pricing mechanism and environment that is existing.
On a consolidated basis, a Bloomberg poll expects revenue to fall 11.4% year-on-year to 2.24 trillion rupees, while adjusted net profit could grow 16% to 17,961 crore rupees. According to analysts at GM Financial, RIL's consolidated EBITDA will likely grow 5% QOQ to 39,900 crore rupees, aided by strong gross refining margins offsetting weakness in petchem margins, strong growth in gas output, and steady growth in digital and retail business. Joshi said impact of supply chain constraint, higher logistics cost, pass-through of rise in input costs, quantum of ARPU growth, and roadmap for new energy and geo-financial services will be key monitorables. On the bourses, the stock of Reliance Industries settled at 2,226 rupees a piece on October 26. As per technical charts, the near-term bias will likely remain bearish as long as it trades below 2,250 mark. Moreover, the stock may retest its March low of 2,180 rupees on the downside. On 27th October, apart from Reliance Industries, Cipla, Dr. Reddy's Lab, Indian Hotels, Maruti Suzuki, and SBI Life are among the prominent companies scheduled to announce their Q2 results. Besides, global developments will also sway market mood.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.
She's working her way to the corner office. Business Standard.